The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hi everyone, Larry's on vacation. Basil Chapman here, sitting in for the one and only Larry Pesavento. And first of all, thank you, John, and his guest Steve. Great. Here at TFNN, we start 8 in the morning. John Logan kicks us off, and we just shoot right through until 5 or 6 o'clock. I mean, there are just programs all day. Education, education, education. That's what we do. So let's go to the market. Right now, the futures are down about $1.25 in the S&P E-mini. You've got a number of things going on. I guess the retail sales were a little stronger than expected. However, the market is holding very, very well. What we're looking at here, if you're looking at this chart, I'm just going to expand. Let me first explain that. On the left here is the daily chart of the E-mini, the S&P E-mini. This is actually the continuous contract trades at exactly the same price as the September E-mini. I like it because I can go all the way. It takes me in my monthly chart. I get all the data going back as far as I want. And that's very important because I believe that yesterday's breakout in the Dow, making that leg D, remember what's the obligation of the Chapman wave? Let me just show you this chart right here. The obligation of the Chapman wave is identifying the lowest low bar of importance, and then merely counting each successively higher peak alphabetically up with uppercase letters. And D, the fourth highest peak, is where other things can happen. Doesn't mean to say it has to happen, but most of the time, you'll find that serious inflection or deflection phases occur right there at that fourth highest peak. Inflection means it pulls back momentarily and then restarts and recycles to the upside. Can go to EF, even G, but actually can even recycle and go to another D. And if it recycles a second time, very often it can go to 6 higher peaks. That's how important this is. On the other hand, is also where deeper corrections can occur. So, fourth highest peak, on the way down, we label them with the lower cases. It's not as important, although it has tremendous importance as to how many troughs on the downside you have before starting a new up move. Don't have to get into that right now. Right now, we're looking at upside activity, and what we're looking at is there was, in fact, a peak D top way back on the 24th of June. At 2119.50, plummets down to 1982.25, starts a brand new peak A, B, C, D. Then it goes to an E and pulls back quite sharply, but when I say quite sharply, just relative that it was the deepest correction that it had for a while. And then it breaks to a new high. I'm talking about the E-mini daily chart. And now we have what I call an alternate count. I do not like to have alternate counts, but I found over the years, and I'm talking about decades, that it's better to be forewarned than to be surprised. And this is saying to us, the stochastic and the MACD, remember Larry doesn't use these moving averages, so this is something fresh for some of you to see. This is the MACD, the moving average convergence, divergence, a series of moving averages, 12, 26, 9 are the important numbers to look at. And then the slow stochastic, which is 14, 3, 3. My theory is that above 80% is very good. In the 90% is extremely good. That's where the textbooks say overbought, and down below 20% they say oversold. And I say, where are they getting that from? Show me a chart that's failed holding up at the 90% level. No, it fails when it goes under 80%, or it can turn down from 95% or 96. But once it holds there, it's really very positive. That's what you want to see. That's like saying the torque of the stochastic has allowed the MACD, the moving average, to start its momentum move. And then the torque is finished in the stochastic and it kind of drifts along. It kind of cruises along. And the MACD has to take over from there. So now what we're looking at is that the MACD has turned down. Stochastic's still at 83%. Not as strong as it was, but it's still good. Price is going higher, but only modestly higher. And what I've done is I've drawn in this rising triangle, this rising wedge, and it's going to an apex. And it says there's tremendous resistance if you're going to continue in this way at about 2187, 7 points up from here. And that's trend lines that are very important. The E-mini breaks into the 2190s, and that 2188, 2190, and that's really positive. Okay, let's get back to our story. Oh, Larry Pesavento is online. Larry, how are you? I'm sorry I didn't see that until right now. How are you?
Great, Basil. I just want to tell you how much I'm looking forward to your show on Tuesday night, because the last one you gave was spectacular, and I imagine this one's going to be even greater. So I'm hoping the folks that are listening will tune into that, because you really have some of the best historical stuff that I've seen. So it's really super.
I'm blushing. I'm embarrassed. I thank you very much. It's coming from you. That's an honor. Thank you so much to even break into your vacation to mention that. Come and call me. That's really nice. Thank you.
Well, it'll be good. Anyway, look forward to seeing you, and thanks for sitting in for me, and I'll sit in for you while you're gone.
Thank you very much. Thank you very much. And enjoy your vacation. Thank you.
You bet. Thanks a lot, Basil. Bye-bye.
Thank you very much for calling, Larry. So, folks, Larry just mentioned this. Let me do that right now. If you go to the front page of TFNN, I'm giving a webinar, a 90-minute webinar on Tuesday night for subscribers. Now, if you want to come to it, you can actually come in free, because you can sign up for my daily newsletter, which you'll get. It's a very comprehensive newsletter. Believe me, I cover the indices, the currency, whatever I have to cover almost every day. And most importantly, I'll be talking about this phase that I think we have begun, that we're actually into in a big way. It's called the coda phase. It's the final phase. The final phase can last 3 months. It can last a year. But it's a phase that says that everything is coming together. You cannot get higher than the world's tallest building. This is what the socio-political, economic, fad, just everything you want to look. I had an email from my brother. He's a city planner in Sydney, Australia, award-winning city planner, and he sent me. He doesn't even know what I do, basically. But he sent me this is out of the spur of the moment. He never sends me anything like this. He sent me something saying the Sydney Opera House, built in the 1950s, and it's really a beautiful building. The acoustics are not too great. The Opera House is actually, there are 2 halls, and one is a lot better acoustically than the other. They're doing a complete refurbishing. All of these things are occurring in historic buildings. And they're occurring, if you just look at the newspaper, you'll see, all of a sudden, you'll see a building you haven't heard of. It was a famous building in the 1920s being refurbished. This is part of what I call, this is a period where all the aspects that culminate in excessivity, that's the word, excessivity, I made it up in 1987, all coming together, and I'm going to be discussing that. How we trade it, is just the big move coming up in the market. Do we first have a pullback? I'll be right back. I'll talk a little bit more about it, and then we will go to the charts. I'll be right back. Basil Chapman, sitting in for the one and only Larry Pesavento, on vacation, but calling in. Thank you, Larry.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I thought it's so nice to hear that music. I used to, a very long time ago when I was a professional musician, I used to conduct that very work. I used to conduct the Mozart overtures and Mozart pieces. I played clarinet. So it's always lovely to hear that. Okay, so let's get back to the nitty-gritties of this E-mini, because this is going to tell us a lot. The E-mini, so I had a question in the den. What starts first, the stochastic or the MACD or the... You can have stochastic pulling back as price rises, the MACD pulling back, or even the stochastic. Price is the arbiter of the trend. It is the key. That is the link that we look at all the time. Well, how is the price moving, and what are the other connecting aspects to it? So very often, you look at a chart and you say, gee, the technicals are starting to fail. The price is going higher. Two things can happen. Think of a balloon or a kite. Maybe a kite's better. You're holding a kite. There's the limited length of string. The kite moves higher according to the currents, according to the wind. There is a moment where the current stops, or the upward draft diminishes. That's where the kite either just kind of hovers or it declines. If it hovers long enough to wait for the next cycle of wind to come in, it could be a split second, it could be a minute, who knows. When the next wind blows the kite back up, that's where you tell whether the technicals are strong enough to push the kite now above to a whole new level, if you loosen the string, obviously, or if it's going to be limited up and the next time the technicals come down, it's going to go lower. Sometimes you have this whole set of waves at the bottom, and the price is just steady as a rock. Sometimes the price is jiggling away, and you're looking and you say, gee, the technicals are not bad. What's going on? So you want to put the two together. The way I put the two together is I assess, in this case, look at the 9-period moving average of 2173. Look at the price rising. The price is making nominal new highs. There's no real breakout from the trend line. If there was a breakout from the trend line, you would see this MACD cross positive. You would see the stochastic go from 83% probably to about 90 or 91%. And you'd have a concurrence of events and technicals that are confirming. That's really what you want to see. If there is, in this particular instance, look, the stochastic and the MACD, this is the weekly chart, this is the monthly chart, this is the 120-minute chart. The 120-minute chart went to a C. Remember the chart that we were looking at before? You want to at least get to a D, especially when you're at all-time highs. So that somehow, some way, there should be a D before in the 120-minute chart of the E-mini above 1280, what was that? Sorry, 2185.25. And then you got to be careful. So right now, I'm flashing a yellow light. We are long in the Dow since last week, early Wednesday morning. And I've raised the stop. I haven't decided yet to do anything else. But we have something going on that says that if such and such happens, immediately take a position in the short side. Why? Because in the Dow, remember we were talking about the Dow for a while now, making that leg D up? Well, we've got that leg D. Let me just show you. This is, I need to squash this a little bit. Oops, wrong one. Squash, squash, squash. And there it is. Leg D in the Dow. We had to wait for it. We actually waited from the day after the peak was made on the 21st of July all the way until yesterday. And now we've got it. So all the little ducks are in order. Now I can do this because we've got a little time left before the market opens. Let me show you a bunch of things. The Dow leg D, weekly leg E. So now I'm saying to myself, and the monthly chart is in leg C, very bullish. Bullish, you could come all the way back to 17,875, the 9-period exponential moving average, and still be bullish. You could even go under it for maybe 1 month, maximum 2 months. Wouldn't want to see it for more than 2 months. But so far, everything about it, monthly says we should go to leg D eventually. All right? The 120-minute chart just made a peak E, and I think that we're going to have a little resistance here, a little timeout, but we should, based on the E-mini, we should go to a slightly higher high. I suspect there's going to be a doji candle today. Monday is the big thing. Do we start another move to the upside to break out and recycle everything? Or is that it for at least this particular phase? My 1 foot is on the accelerator, lifting off the accelerator, and the other foot's hovering above the brake. Let's just make it as simple as possible. Yellow light is flashing. All right, now we go to the S&P, SPX.X. The S&P, alternate count, F/B. If it's an F, the characteristic of the next two bars should be very ugly. The S&P should close under 2176 either today or Monday, and actually Tuesday should be down sharply. That would be the characteristic. And here we're talking about the MACD fading to confirm the moving average convergence divergence, two sets of moving averages, exponential moving averages, fading to confirm the new highs, but the new highs are not that big, right? They're just slightly higher, and the stochastic's still good at 84%, but it has the pattern I call the double camel hump. You know, these are technical terms that you'll find in all the key textbooks. Of course not. They like to look at the stochastic second arch failure or something. You've got to use highfalutin words. But double camel hump, those of us who have done the Chapman wave methodology in more detail love that expression and know it very well. And that was the one that helped us in October of 2008 to identify the top. Okay, in the weekly chart. Now we're going to go to something else. The IWM. The IWM was lagging, and then suddenly it moved up, but it's making an F/A. It's holding the 9-period moving average. The weekly chart is in D. You remember the S&P was that in E in the weekly chart? And now the technicals of the IWM, the Russell 2000, are not that great. Look at the QQQ series. The QQ series has really recycled. It isn't a Chapman wave instant restart, but this is G/C right now. My suspicion is that this is a very slow turn to the downside. It's a rolling over, and unless the Qs, the power shares QQQ Trust, which trades, it's the NDX 100 trading vehicle, unless it goes from 117 straight into the 118.30 area, that'll be really positive. And look at the strong leg up. This is like an A to B equals C to D in the weekly chart. And I had a peak C failure before. That's unusual. So I have to call, I'm calling this a B for now, but look at the monthly chart, leg B, hasn't gone to all-time highs. Oops, yeah, at 120.53, I believe, from the year 2000. All right, let's go on to the next thing. The New York Stock Exchange. Larry always talks about it because historically it's just been one of the major indices. It has, what, 2,000 stocks or something. It has the big ones. Now look at this, leg D, but it's a right shoulder failure potential if it starts to break down from 10,836, not an all-time high. The all-time high was 11,254 last year, May of last year. So it's quite a bit underneath. It's 600, 400 points. Now 400 points actually is quite a lot of points. My thinking here is that the New York Stock Exchange will eventually, this year, break 11,254, and then the fireworks really begins. But in the meantime, a close in the 10,000, under 10,700 over the next week would be quite negative. But so far it's good. I'll be back. Basil Chapman. Market will probably have opened by the time we get back. Looking forward to it. Sitting in for Larry Pesavento, and I'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Good old Manager Figaro there. Okay, we've got Dow down 21 at 18,592. S&P is down 274, 2183. Got the comp index down 8 at 52.18. The VIX index is running a little bit. It's up 15 cents at 11.83. You have got the E-mini down 325. You've got the gold right now. The GLD is up $1.40 at 129.06. Gold itself is up $7 at 13.57. Silver, I believe, is up a little bit. Yep, up 12 cents at 2014. Crude oil is, in fact, if I can find crude oil, just disappeared in front of me right here. Crude oil disappeared. I'll just do this and I'll go to the CL at CL right here. Let me make sure I'm not messing up other things. Yep, crude oil is up 26 cents at 43.75. That should help the market in a little while as it stabilizes after a terrific day yesterday. We're looking at bonds. Now, bonds, this is going to be really interesting. So the TLT right now is up $1.45 at 148.36. However, if you look at, where did it go? So it's being covered. It's just in a trading band until the TLT can actually break into the 140.90. Let's call it 141. As soon as it can get to the 141 area, that's a positive because it can challenge the high of the 29th of 141.68. But on the downside, any break of 137.70, I think I'd call it, no, let's call it 134.40. A break below, 2 points lower is very negative in the sense that it'll push yields up. And if yields go higher, they will be looking to see what happens in the XLF, which is down 14 cents at 23.80 right now. And it made a peak C, and it looks like it's struggling to get to the D. Let's look at something else, which is high-grade copper. High-grade copper at this particular point is down 0.03. It's just stuck in this range. Remember, for my subscribers to my opening call, I've been talking about this for a little while. If I can find it, I wonder if I can do that. No, I won't do that. What I've been saying is that gold, look at the chart, gold, the dollar, which is down at 44 cents. The dollar has this H pattern, which is what I call a lowercase h. I meant to draw it the other day. I would have gone like this, made it a solid line so that you can see it nicely. Color style is that. And then it makes a little arch formation lower down. And that arch formation, the big thing about it is, how does it test the left side low? So it looks like a lowercase h with a sloping back. And then, if it breaks underneath and closes above the left side low, in this case 95 round number, that means one thing. If it doesn't even get there and starts a sharp rally, that's very positive. If it gets there and closes above, that's good, but it says you can bounce, but you're going to bounce only to the nearest peak or moving average of consequence. So that's about 95.88. However, if it closes below, and it closes below for 2 bars, that is 2, doesn't matter what time frame, in this case 2 daily bars, if it closes below 95 round number, it is going lower. It doesn't tell you how long yet, but it says it's going lower. It's a negative. And look what's happened. It went to a peak D in the 120-minute chart. That's this little one here, this little rectangle, and it's broken below it. So even here, it needs to close above, on a very short-term basis, above 95.44. And it's at 95.42 right now. If it closes above that in the next 2 bars, especially if it closes sharply above, that's a positive. All right, back to our story now. So we've covered those. Because it's Larry's show, I want to do the EUR-USD, the currency pair. See, this is like a big rectangle formation, like that. And that rectangle, charts can trade in rectangle patterns for a lot longer than you were thinking. I was looking at John Logan. I couldn't quite hear because I was busy working at the time. And I saw this chart that he showed. I don't remember what it was. And it had this long pattern that goes from a lowercase h to a lowercase m. And my philosophy has always been rectangle formations can trade sideways a lot longer than your patience. As you're waiting for it to break out, the real thing is to short the upper part of the band and to buy the lower, and just keep doing it until you're wrong. And you can make more money by doing that than the one big move to the upside. But you've got to know how to do it. You've got to be very patient. So, okay, now what I'm going to do is I'm going to go to the USD JPY. That is the dollar and the Japanese yen. And that right now is doing that H pattern that can go to a lowercase m pattern. Not very good looking at all. I keep getting calls about DB Deutsche Bank, and I keep saying, don't touch it. It can bounce, but you don't know what's going to happen overnight. And it's in that rectangle formation, and it's saying at 1427, unless it can snap right above 1479, I'd actually have to say, unless it can get into the 15s and trade there above 15 for 2 out of 3 sessions, that'll be really positive. But until it can do that, you've just got to be careful, because the news comes out and it's almost always very bad. At this stage, I'm looking more at a successful H pattern. The low of Deutsche Bank's 1250 double bottom low on the 6th and 7th of July was retested at 1248 and went to a lower low. And that says that your big issue now is to see how it can deal with 1479, the high of the 21st. If it hadn't broken that low, I'd say, I think it could break above. So we'll be watching this really closely. Here's the next thing that we're going to do. Within the context, I want you to look at other markets. Look at the Nikkei. The Nikkei right now is trading at, it's down 70 in the futures at 16,810. There's a strong chance that 17,000, this whole area between 16,950 and 17,050 is going to be very strong resistance for now. And there's that H pattern trying for an M pattern. There's that monthly chart. Look at that 200 period moving average, that coral color support level at 15,063. Keeps bouncing off that. One day when it breaks under it, that's going to be negative. Right now it's in a trading band. So you can just trade the band, that's all. And hopefully it's a very good band. Okay, let's look at GE. I talk about this a lot, when my subscribers know. GE is telling me that the upside could be limited in the market if it continues to be one of my bellwethers in my Dow Quartet. What is my Dow Quartet? It's my Dow Quartet index. Of course, it's unofficial. And that index is saying that GE is stalled. It had a fantastic move. It's taking its time now recovering. It hasn't broken down, but if it closes under 31, it's a 31.24. That's going to signal a move probably down to this inside track support level into the 30 to 31 area of support. IBM is the next one in my Dow Quartet, and that's acting okay, but it's doing this pattern that I keep talking about, where the technicals are kind of failing, and the price is slightly moving higher. And this is saying to me, just be careful. Leg E on the 200 period moving average in the weekly chart. IBM's had a spectacular move from 116 to 165. I don't see any reason why it doesn't take a little bit of a breather here. Triple M is trading at 180.92, and at 180.92, it has not yet gone to a D. But if it goes A, B, C, 2 C's, it could fail underneath here. And Triple M is really a key metric in my work, because it had that spectacular W formation before. So Triple M is still acting okay. I think it's going to go a little higher in the short term into next week. And UTX, the same thing. Those are my 4 Dow Quartet stocks. Basil, Chapman, Dow's down 43, S&P's down 4. We'll be back. We have made leg D in the Dow. Now other things can happen. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender. It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Hi, folks. Don't forget Nadex program coming up with Tom, Tommy, and Daryl. Should be great as always. Wow, I love watching them trade, how they get those positions, and excellent. Hey, we're down 41, and the S&P is down 4. So far, just a mild consolidation. However, he has the 10-minute chart, made that peak E in the 10-minute chart, and the E-mini second peak D. Remember how important peak Ds are? At fourth highest peak, peak E. It went to a D, and then it went to a peak E, and then turned down. And now this is going to be this is a basing area. This is the area that there has to be some kind of some support to. I was expecting. I said to subscribers, my thinking here is that the Dow will make some kind of a doji pattern close today. That's the 120-minute chart that we were talking about yesterday. Here we go. And that's it. That's a very important look. The MACD hasn't yet crossed positive. It could deflect lower. But my thinking is that we'll have a little bit of a rally and then maybe make just a nominal new high maybe today. But this is going to be important because if there is a deeper decline and we go down 80 to 90 points, then I've got to consider that this D is, in fact, making a peak D today. And at peak D, we've got to remember peak D at 18,016 on the 8th of June. Look at that sharp pullback from 18,000 to 17,000, 1,000 points. So this one, I believe when we get the sell signal in this particular move down, that's why the webinar on Tuesday night is going to be so important. There will be positions that we're talking about that we're going to take, a whole bunch of things, but it's also how we're going to check off these different icons that I'm expecting to unfold. The visual icons, and they come from nowhere. There was one the other day, a week ago, that just came out of the blue. I never expected it, and it matched the Amelia Earhart trip. You first of all get the development, the Wright brothers, and then you get Lindbergh taking the planes in a very structured way. He didn't mess around. There were no games. Everything he inspected absolutely. And then you get the more adventurous and like Amelia Earhart. I had the same comparable thing occur, I saw the same comparable thing the other day as an icon. And it says we're into that late 1920s phase. But it doesn't mean to say we have to go into the Big Depression. It just says capitalism is going to come under increasing pressure. And therefore, the market will probably come under increasing pressure over the coming years. How do we deal with it, and what do we do? All right, back to our story in this limited time that we've got. So we're looking at, I want to do a couple of things, get a couple of questions here. I'll look a little deeper into oil because that was the question. Yes, Went to the wrong chart. Sorry, ESU 16. Okay, go to this chart right here. And I just want to look at a little deeper at crude oil. And I'm just going to, as I do that, I'm going to bring up the 5-minute chart. Look, the green is the SPY, trying to rally off the lows. I meant to do something, I'm sorry. That's it, got it. So it came off the low, and it's at 218.37. But crude oil is actually rallying quite nicely. Crude oil is the USO in this particular instance. So it doesn't trade exactly, but it's our best vehicle that we've got as a trading vehicle. And it doesn't trade during the off hours. So it's not perfect at all. But it's saying that there's a chance that there could be a little bit of more of a bounce, because there are a lot of people that didn't get into the rally yesterday. A lot of people are shorting. So now the market needs to say, hey, not just yet, even though maybe this is a good time, but we'll see. So now I'm looking at the crude oil. It's in leg B. Had a couple of questions. Is this something to buy? And what I had said is, remember, we had a couple of calls, either to Larry's show or to my show, about crude oil. And I've said, if you're in the USO or anything the equivalent, you need to see a strong move up. You want more of a V-shaped pattern. Look how it came down with that beautiful trend line support. Now what you want to see is trend line support for the upside. And you don't want to see anything like a parallel. Let me just show you this here. Just a little technique that I like to use. You don't want to see parallel resistance become tremendous resistance and having the price fail. So the next level of resistance will be 44, 60 to 68 in crude oil. And then I want to see crude oil by Monday or Tuesday power right into the 45-30 area. Why? Because that gives you the structure that says that this move, this concerted move down, has been defeated completely with a brand new series of buyers. That's what you really want to see. Even the dips are being bought. You want that to continue, because if crude oil turns around and you go sideways, it starts that H pattern. I always like to draw the two together because they are fighting patterns. The H pattern says, I don't know if you're going to make it. I think you're going to come and do a retest of the left side low of 39.18. The other pattern says, no. If we come back, I have to do it intraday and 42.30s must be a springboard for another move to the upside. And that's how it has to work. And that's how it has to help the Dow itself, the S&P and the Dow, the general stock market. Okay, so I did that. And I had a question about, what happened to X? That's US Steel. Well, X is trading right now down 24 cents. It had a spectacular move. It went from $6.80 to $27.64. I would say that was a pretty good move, almost 4.5 times higher. It needs a rest, and that rest says that steel itself could be part of this consolidation before it kicks in again. So US Steel has the support now between, 21.79, it's at 22.47. 21.79 is the 9-period exponential moving average. I suspect it's going to go down there a little bit, but I don't think it's going to hit the 1840 support of the monthly chart. Not yet, anyway. I think we have to see, how does it hold 22 to 21.50? That's a kind of an area that's going to be very important. Is that an area to start nibbling in? I'd have to see the stochastic and the MACD in the weekly chart to say yes. So I'm going to hold off for now. All I can say is spectacular move. Yep, spectacular move, now digesting those gains. Another thing that I want to look at, if you don't mind, is the VIX index, the VIX.X. And that VIX index is trading at 1190, up 22 cents. Up 22 cents when the market is only down, the Dow's down 30, S&P's down 3. I'd say that's a little excessive. I'd say 10 cents, maybe 13 cents, but 20 cents. So let's see, is it telling us something? Is it saying, hey, there are people out there buying insurance, and that insurance is there because they think the market's coming down next week or the week after. So we're going to be watching the VIX very closely. The pattern itself says you could bounce, but you're probably more like in an H to an M pattern. And the only way that you can break out substantially, having gone to a lower low of 11.02, below the 1140 and the 1140 low of mid-July, is to not only power higher, but you've got to see that VIX index in the 1350s to the 14 area. That's a long way. That's 2 points. That means that the market would pull back, Dow would pull back about 180 to 250, and the S&P would pull back maybe 18 points. So we'll see. Meantime, I think that on the intraday basis, I would not be surprised if this trough D that's just formed in the, remember I put the arch pattern here. I showed that the downtrend move. I showed that the V-shaped pattern had to hold. We'll see. This is going to be an important move. Why? Because if the market actually just completely fails from here, that's going to do two things. It's going to say to us, excuse me, it's going to say that there is now the negatives of the technicals, which didn't confirm the rally, are going to be as important as anything else. I'll be right back. Basil Chapman, sitting in for Larry Pesavent to trade what you see. Be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back just showing that this is the 5-minute chart. The red is the USO and the green is the SPY. And that's showing that the USO is rallied. SPY is down 31 cents, but it's trying to rally. Okay. So I spoke about the volatility index. I told you what I'd be expecting if there was to be a rally. The VIX has to go from 1184 down to about under 1170. And then that would help the market. Right now, after the big move up yesterday, we're looking at a kind of a rotational market in the sense that some sectors are working, some are not. I'd just like to look for a moment at Chevron, CVX. CVX, yeah, it's up a little, up 33 cents. And Exxon is up a little bit more, up 52 cents. So these are going to help the market a little bit because they're heavily weighted. They're in the Dow. Now, one of the things that I wanted to talk about is just briefly one more time. On Tuesday evening at 6 o'clock Eastern Time, I'll be doing a webinar. I consider this to be one of my most important webinars. How can I put it? One of my most important webinars. Yes, for timing, we also like to do that. I mean, it's very important to be able to time positions. We've been long. Are we going to switch to the short side? We'll see. Maybe it'll happen before then. I actually think that some of our positions we've already taken, and they're going to be the positions that we're taking prior to the actual webinar, although they'll be featured in the webinar because I have to do it in a timely fashion when the market tells us to. So basically what we're looking at here is that I'm going to be talking stocks, sectors, etc., what I think will work, what I think is overbought, what is oversold, what I think is what we want to be doing in this interim period, which I think is going to be a consolidation period coming up very soon, maybe starting next week, we'll see. But most importantly, what I really want to do is I want to feature the overall picture so that those of you who have portfolios that you want to know, do I start whittling away? Do I add to it? Is this a period where I need to be more in this or more in that? That's what I hope to be talking about somewhat, and I'll be taking questions and answers as well. So that's Tuesday night. You can get it free by going to my to the website, to the TFNN site, and it's called New Highs to Come, 90-minute live event with Basil, Chapman, August the 16th. Check it out. I think you'll find it really interesting and hopefully very beneficial. Thank you for being here, and have a wonderful weekend. I'll be back in an hour for my show, the Tiger Technicians Hour.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.